Hello, yes, welcome back to my YouTube channel. Today we're going to study about psychology of trading, the psychology, the mindset of trading, and the mindset of most traders when they are trading. We're going to study about why most traders lose money and how to think like a pro. The trader's biggest enemy is yourself. Markets don't beat most traders, their own emotions do. Understanding this is the first step. 90% beginner failure rate of new retail traders lose money in their first year of trading. Most traders lose money when they have just come into the market because they think they understand, and also maybe they lack information of the market, so they end up losing a lot of money, and most of them end up quitting during that course of time because of maybe stress and also depression. As the number one cause of loss is emotional decision making and not strategy or market knowledge. Most traders don't have the market knowledge and the strategies to use, so they end up losing money. Loss aversion effect. Losses feel twice as painful as equivalent gains feel good. So as a trader, you need to understand how to lose, because losing as a trader is always going to be part of your life as a trader. So you must train your mindset how to lose, how to sit with the losers every single day. So most beginners come into the market without the prior knowledge, thinking that they're going to always be winning and winning and winning, which leads them to lose and also maybe feel pain and to feel depressed and feel stressed. That's why most of them end up quitting and leaving the game of trading. The key truth is you can have the best strategy in the world and still blow your account if your mind isn't disciplined enough. So trading is a very, very different business whereby you can have everything in place, whereby you can have the best strategy, everything, you can have the best trading plan and still lose because your mindset isn't set up well. So you need to understand how to lose. You need to understand how to control yourselves in losing periods. So that's a very, very key factor in trading. Fear and greed, the two forces that destroy accounts. Every losing trade has one of these two emotions hiding behind it. Fear, closing winners too early out of anxiety. So most traders, most especially beginner traders, they close their trades too early. They may feel the pressure to close the trade or maybe the anxiety to close the trade. So they end up missing on potentially more money or missing on following their trading plan because they are very, very scared to hold the trades. Are not entering valid setups, scared to lose. This is also a very, very key problem that I also face, like having that fear to enter a trade because you're scared of losing or being confused on what to do. You feel it's not enough to enter the trade. Moving stop loss further away to avoid pain. So most traders have this problem of maybe when they are losing, they decide to move their stop losses away, hoping that the trade maybe is going to reverse. So you must have a plan in place and know that maybe I'm going to lose this kind of money, maybe I'm going to lose $50, maybe I'm going to lose $100, and set up your stop loss accordingly to that. Freezing during volatile markets. Most traders also have this problem of freezing and not knowing what to do when the market is volatile and the market is pushing very, very aggressively. Greed, holding losing trades, hoping for a reversal. So most traders, when they see that the trade is going against them, they're going to try to hold, because they're going to hope that maybe it's going to reverse at some time, but most of the time they end up losing. So it's very, very key to understand that you need to come into the market with a plan and know that maybe I'm going to lose $100, I'm going to lose $200, and stick to that plan, because at the end of the day as a trader you cannot be perfect. You cannot be perfect. You can't be perfect. You're going to always lose. You're going to always make mistakes. So you need to understand how to be consistent. You're over leveraging to hit bigger profits faster. So most traders, risk very, very high so that they can hit bigger profits faster, which can also lead to them losing very, very big amounts of money and also getting stressed and going into depression and also going into debt. So as a trader, you need to understand how to risk small and also focus on the long-term game, not the short-term game. Chasing price after missing an entry. Yeah, I also faced the same problem also within some period of time. Of trying to chase price after missing an entry, after feeling maybe stuck, after maybe fearing to enter. This can happen to you as a trader, so you need to have a plan and you need to understand your system or your setup that you trade. Add into losing positions, averaging down. So this is the same as holding losing positions. Some most traders are to losing positions thinking that no, it's going to reverse. It's very, very key to have a plan in the markets. Revenge trading and why it always fails. One bad trade triggers another, then another. Then it's a spiral and it's all emotional. The revenge trade cycle. You take a loss, you feel angry and want it back. You enter a new trade without a plan. You lose again and now more frustrated. You increase your position size, account devastated. So most traders, enter into the market without a plan, like I've said before. They come into the market without planning, with all the emotion, thinking that they're going to make money on that exact day. But trading is a business of the long term, not the short term. How to break your cycle? Set a daily loss limit, like 2% of the account. Walk away after 2 consecutive losses. Write in your trading journal before re-entering. Wait 30 minutes and reassess with a clear head. Never increase size to get back losses. So it is very, very important to also understand that as a trader. After you lose in the market, you should just walk away and just leave the market and focus on the other parts of your life, maybe your other hobbies and everything. So it's very, very clear to walk away after losing. Overconfidence after a winning streak. A string of wins is dangerous. It makes you feel invisible right before the market reminds you you are not. Increasing position size, doubling or tripling size after wins. One bad trade can erase a week of gains. Skipping your rules, ignoring your checklist because you are on a roll, but your edge depends on discipline. Overtrading, taking setups that don't meet your criteria just because you're feeling confident. Predicting instead of reacting, believing you can feel where the market is going instead of following your system. Ignoring risk management, removing stop losses, or holding trades with no plan because you feel it will work. Most traders have a problem of overtrading. The fix: track your win rate over 100 plus trades, not 5. A winning streak doesn't mean your edge has improved. A cognitive biasness that costs traders money. Your brain has built-in shortcuts that were useful for survival, not for trading. As human beings, our brains are wired for survival. So as a beginner trader who hasn't yet mastered their emotions yet, most of the times you end up confining with the survival brain of trying to avoid pain. Confirmation bias, only noticing the information that confirms your existing trade idea. Ignoring warning signs. Recency bias, assuming the last few trades predict the future. Overweighting recent results. Anchoring bias, getting anchored to your entry price, refusing to exit even when wrong. Sunk cost fallacy, holding a losing position because of how much you already lost in it, not because it makes sense. Awareness is the first step. Journaling every trade helps you to spot your own pattern. So it is very, very important to write down. It is very, very important to write down how you feel during a trade, or how you're feeling during a losing trade, or how you're feeling during a winning trade. So as a trader, you need to understand that sometimes may not just focus on trading, but also writing down your trades, writing down your losses, writing down your winners, explaining why you lost, why you won. The discipline framework that separates winners. Profitable traders don't feel less emotion. They have systems that prevent emotion from making decisions. So as a trader, you need to have a plan. You need to have a system. You need to have a checklist. And understand that the traders that are making money in the markets, they have systems in place. They know their mistakes. They know their triggers. They know how to control themselves in the markets. Your trading rules checklist. They only trade pre-planned setups. Risk max 1 to 2% per trade. Not trading during major news events. Stop after 2 losses in a day. Journal every trade immediately. Weekly performance review. Pre-trade mentor checklist. So you should ask yourself as a trader, am I trading because of a setup or emotion? Have I eaten and slept well today? Am I trying to recover yesterday's losses? Would I take this trade if I was flat today? Is my stop loss placed before I enter? It is very, very important to have guidelines around your rules, and also understand as a trader you're going to lose and also make mistakes. Psychological mistakes that destroy beginner accounts. These patterns repeat across almost every new beginner who blows their account. Treating trading like gambling, seeking the thrill, not the edge. Most traders focus on big risk, quick reward, a big reward. So they end up risking too high instead of focusing on smaller gains, which keeps you afloat as a trader. Checking your P&L every 30 seconds, making decisions based on temporary drawdowns. Comparing yourself to others online who only show winning trades. Most traders online won't show that they are losing, or won't show you they are losing periods. Most traders are only going to just show you winners. Refusing to accept a loss, holding positions days beyond your plan, skipping your system after one loss, thinking it doesn't work. Go all in one trade because you're sure about it. You shouldn't go all in one trade because the trading is a business of probabilities. You shouldn't stake all your money all in one trade thinking that, no, this trade is going to change everything for me. You should focus on small gains and growth over a long period of time. Yeah, so guys, thank you for watching this video. Like, comment, and subscribe, and also share. Peace out.